Hi, welcome back to Crypto News. On this channel, we'll keep you updated with the most important news in the crypto market. So if you're into crypto and want to make the most from this market, make sure you subscribe and hit the notification bell. And I'm Chloe, your host today. Let's get started. Let us start today's video with macroeconomics. The market witnessed a positive signal from the Fed after the meeting minutes were released on Wednesday. According to CoinDesk, Bitcoin quickly jumped about 1% from $16,448 to $16,565 after the minutes from Fed's November meeting showed that most of their members prefer a slower pace of rate hikes going forward. Reflecting a statement of many officials over the past week, the meeting summary indicated smaller rate hikes coming. Markets widely expect the rate-setting FOMC to step down to 0.5 percentage point increase in December, following 4 straight 0.75 percentage point highs, CNBC commented. If such step down actually comes true, we can be confident about Bitcoin price hiking next month. For the first time since the collapse of FTX, we believe that things will get better. Just a little more, at least we can be less worried from now on. And here's another good news for Bitcoin lovers. CoinDesk recently reported that the government of El Salvador proposed a bill of digital asset issuance law to the Legislative Assembly. The bill aims at creating a legal framework for public issuance of digital assets. In 2021, El Salvador became the first country to make Bitcoin legal tender. Apart from aggressive buying Bitcoin dips, the country president even revealed plans to raise $1 billion via Bitcoin-backed bonds. However, the Congress must pass the legislation before issuance of bonds. The good news is President Bukele's New Idea Party has majority in the legislature. So what will happen with the bill is passed. Although the crypto bond is nothing new, a legalized Bitcoin bond could bring much more liquidity and power for the world's largest cryptocurrency. And just like you, we would love that happen. If you find that positive sentiment is somewhat odd, let's move to a slightly negative piece of news. As you may know, the crypto market has taken a beating recently, and many projects are struggling due to low liquidity. In such situations, an attempt of exploitment was made to Aave, posing a major setback for the crypto space, in particular the DeFi sector. According to Blockworks, an unidentified trader believed to be Abraham and Silbert learned about 92 million of CRV, the native token of Curve Finance, over a period of 6 days. But rather than paying back the loan, the trader allowed a total amount of $63.6 million in USDC collateral to be liquidated on Tuesday. In this latest case, the liquidation threshold for USDC was 88%. To put it simply, it means that once the value of the borrowed CRV exceeded 88% of the USDC leverage supplied to Aave, liquidators walked in to sell the USDC, buy back CRV, and close the debt positions. However, there was a concern as there needed to be more CRV liquidity to make this happen quickly. Instead, the situation would close in 15 minutes via 365% million liquidation transactions. As a result, it was left with minimal bad debt, totaling around 2.64 million CRV, or roughly $1.6 million at current value. In hindsight, the incident showed that CRV is suffering from a liquidity shortage. If a similar scenario happened, the damage could not be minimal anymore. In response, the community put out a proposal in an effort to prevent another incident and close the gaps. The proposal features a change to the liquidation threshold for assets with higher values to 80%. And now let's move to the event that all investors are concerned and waiting for. The next Bitcoin halving is projected to occur on April 20, 2024. A Bitcoin halving event occurs every 4 years when the reward for mining Bitcoin transactions is cut in half. In the past, these Bitcoin halvings has correlated with a massive rise in Bitcoin price. The most recent halving occurred in May 2020. On that date, Bitcoin price was $8,821. Only 1 year later, in April 2021, Bitcoin price had increased more than 617% to $63,233. If history will repeat itself, the price of Bitcoin would reach a dip on December 30, 2022. We would then see a revival in early 2024 and then a strong revival after the actual halving. Importantly, according to efficient market theory, if we all know it's going to happen, then it has to be priced in. So far, the result of these Bitcoin halvings has been ballooning in price, followed by a large drop. However, if you look at it closely, Bitcoin price is still keeping higher than before the halving events, meaning Bitcoin price has always been on a long-term uptrend, despite the ups and downs, which are the norm in any markets. The uptrend is supported by Bitcoin halving events, after which higher price floor have been set. Still, investors need to keep a cold mind and avoid fear of missing out during the Bitcoin halving periods. On November 23, 2022, Binance also announced a 29 project on Binance Launchpad, Hook protocol. According to Binance, it could record user BNB balances for up to 7 days. The public sale token price of one hook is equivalent to 0.1 USD. However, the platform will determine the price equivalent in BNB before the subscription. We all know Binance Launchpad new listing are events that capture lots of attention from crypto community due to the selection of quality projects and potential token price appreciations. So what is so special about Hook protocol? Hook protocol is building a connection network to empower Web3 social engagement and a growth funnel for Web3 applications. So far, Hook protocol has launched the first pilot DApp, Wildcash, aiming to be the Web3 community gateway in emerging markets. Shortly after the launch, Wildcash became the first and only Web3 application ever, dominating Google Play for 9 consecutive days in Indonesia, with over 2 million monthly active users. What do you think about this Hook protocol? Is this Launchpad going to be as good as StepN and GMT token, a Launchpad event that Binance held in March that we all remember? Now, let's come back to the FTX collapse. Recently, FTX founder Sam sent a letter to his employees. In the letter, he apologized to his employees and offered his explanations of FTX collapse. Accordingly, FTX had around $60 billion in collateral and $2 billion in liability this spring. But market crash meant the collateral values were half. The next reason given to FTX collapse is the driving up of credits in the industry. Another crash in November also led to another roughly 50% reduction in the value of collateral over a very short time. The bank run caused by what Sam termed attack in November reduced another $8 billion in collateral, he said. As a result, FTX filed for bankruptcy due to an extreme amount of coordinated pressure. At the end of the letter, Sam claimed there was actually potential interest in billions of dollars of funding minutes after he signed the Chapter 11 bankruptcy protection applications. And maybe there is still a chance to stay the company, he said. Although the letter showed the downfall of FTX and commented on where the money went and why the collapse happened, he did not address controversial aspects of his leadership and management. For example, arguments that FTX loaned customer funds to assist the company, Alameda Research, or the leaked document that revealed the tight relationship between the two companies involving the FTT tokens. So, what do you think about Sam's words? Does FTX have any chance to come out of the current situations? And that's the end of today's video. Share the thought in the comment below and don't forget to like and subscribe to our YouTube channel. And I'm Chloe. See you on the next video. Bye!